If you can master supply and demand flip zones, you will be able to increase your win rate, increase your risk to reward ratio, and make so much more money than the bugger who is still trading support and resistance levels. So in this free course, this is what you will learn. What are supply and demand flip zones? How to identify and trade these zones? How to combine liquidity with flip zones so that you can avoid smart money traps. And lastly, I'm going to show you a high win rate trading strategy using these flip zones. So what are supply and demand flip zones? They are basically point of interest where a supply zone transitions into a demand zone or vice versa. And they basically signal to us a shift in order flow of the market. They tell us price has just go from bearish to bullish or bullish to bearish. And it basically just tells us that price is going to reverse. And it's caused by changes in the market sentiment and the psychology of the market participants. So these supply and demand flip zones basically tell us that price is going to reverse right now from a downtrend to an uptrend or uptrend to a downtrend. So there are basically two types of flip zones. The first one is your supply to demand flip zone. Over here, price was potentially could be making that bearish order flow, price just going down, creating that downtrend, creating that lower high and lower low, just breaking through the last low, creating your break of structure somewhere right around here. And then it just continue going down and go down, eventually come down here, and then it comes up. And over here, what we have was a supply zone, right? There was this supply zone that was formed when price created this lower high right here, because this supply zone caused price to go all the way down. Now, in this example right here, if this supply zone were to do its job, price is going to go up there, right? Tap into that supply zone and continue going down even further, right? It's going to continue going down even further and potentially creating that lower high and lower low dynamic. But in this case, that was clearly not the case, because what price did is that instead of creating that lower high and lower low dynamic, price actually reacted from this supply zone and actually comes down here and creates a higher low. So you can see this low is higher than this low right here. So this could tell us that price have just shifted from supply to demand. So over here, this is where we can draw our demand zone after price goes up, react to this demand zone, and actually break through the last lower high, creating our shift of structure. And this pretty much just confirmed to us that, price could potentially reverse from a downtrend to an uptrend right now, and we can look to enter for a buy. So your next step is to wait for price to actually come back down to this flip zone that was created right here. Just bear in mind that at this point of time, right, price has already flipped from supply to demand. So this is your supply to demand flip zone. So just wait for price to come back down to this supply to demand flip zone, enter for your trade, and just start collecting cash. Now, the thing about this flip zone is that it is very important that you actually get that failed reaction right here. So what happened right here was that there was a failed reaction. Like I said, if price were to do its job, or rather if this supply zone were to do its job, it's going to continue the bearish order flow and just continue going down, creating a lower high and lower low. But in this case, there was a failed reaction right here, where price actually, instead of going down, continuing going down even further, it actually started reversing right here and hit back up. So this was the failed reaction being formed, and this just tells us that, this supply zone works, but it's not strong enough for this overall trend to continue. And then this is when the demand have overpowered the supply, right? Where the buyers have pretty much just pushed the sellers out, right? Just chase the bears out, and right now they're gonna come in and take their place. Next is your demand to supply flip zone, and it's basically the opposite of your supply to demand flip zone. And in this case, you are flipping from demand to supply. So what happened is that price could be, going up, creating the higher high and higher low, and eventually comes up here, pushing up, breaking through the last high, creating a break of structure before price actually started pulling back. And when it pull back, guess where it's going to pull back to? The demand zone right here, like this demand zone right here that actually resulted in this push phase, right? This break of structure. So this is a very strong demand zone, and price is going to come down here and tap into that demand zone. Now, the problem is if price tap into that demand zone, you must ask yourself whether this demand zone will work or not, right? Whether this demand zone will hold. If it's going to hold, it's going to continue to go up, creating your higher highs and higher lows. But if not, then guess what? That is your failed reaction. And that is what we see in this scenario right here, right? This demand zone, it failed to print that higher high, right? It failed to actually go above this high. So what it does was that it actually goes up and come back down. So it created a lower high right here, right? And this could potentially be your shift in order flow. The price went from the strong demand to potentially supply could be stepping into the market and, let price collapse, right? So that is essentially what we want to see, this failed reaction right here. So after we see this failed reaction, we are pretty much waiting for price to confirm to us that this is going to be a valid reversal. And we are only going to get a confirmation where price actually created that market shift, where price actually go down here and break through the last higher low, giving us a shift of structure, confirming to us that price have potentially shifted from a bullish uptrend and right now it's going to turn into a bearish downtrend, and we should be looking to sell. Now, where do we sell? We sell at the place that actually created the failed reaction, which is this area right here. So this area will be your demand to supply flip zone, because price has flipped from demand to supply right here. And that is when you can look for an entry and once again collect cash or credit or whatever you want to collect. Now let's go on to the charts and learn how to actually identify and trade these flip zones. So when you pull up to a blank chart like this, the first thing you need to do is to always identify the overall market structure and also mark up any sort of supply and demand zones. If you still do not know how to mark up supply and demand zones, go and watch this video right here. But anyways, right here, first things first, we look at the overall trend direction, right? We see that price in the uptrend, price creating the higher high, higher low, higher high, higher low, and right now is pushing and potentially creating another higher high. So clear as day, price is in a push phase, right? Price is not in a pullback phase, price in a push phase, and price is in an uptrend. Now, before you think about entering for a buy, you need to look out for your blind spots. Look out for any sort of opposition zones, right? What I mean when I say that is that in an uptrend like this, you should look out for any sort of supply zones that is near this area here, because you don't want to enter for a buy at a supply zone where there's going to be a lot of sellers entering into the market. It's all about timing, right? It's all about entering at the perfect timing. So we zoom out a little bit and we can see that clear as day, there is actually a supply zone somewhere right around here, right? Supply zone somewhere right around here. This will be your supply zone, and then there is also another supply zone all the way up here at this extreme high right here, right? And yeah, there's basically two supply zones right here. So the reason why I marked up these supply zones is because this is what you call your rally base drop. Rally base drop, right? And it basically tells us that this is the initiation of this push phase, right? These sellers entering into the market. You can see huge bearish candlestick right here, which pretty much tells us that there's some sort of smart money or financial institution involvement right here, right? They entered for a bulk amount of sell orders within these two areas here. So that is my supply zone. And I basically draw my supply zone by marking up the entire range before the bearish liquidity or the supply enter into the market. So it will be this entire range right here. But sometimes what I like to do is to, refine it to the candle right before the bearish liquidity, right before the supply actually happened. So in this case, I'll refine it to like this candle, right? So the reason why I like to do this is because I want to keep my zone nice and tight instead of having like this entire consolidation right here, nice and tight just like this, and you will most likely do. And right now, the thing about price is that even though price is in an uptrend, and by right, we should be entering for a buy because we want to trade the trend, right? But right now, price is actually in a supply zone, right? So that's the key thing to note. That's a big red flag. And when price actually enter into the supply zone, my next step would be to, go down to my smaller time frames. This is where I look for my entry, look for my flip zones. And in this case, I'll most likely be going down to the 1 hour time frame, right? Once I go down to the 1 hour time frame, I'll be marking my structure up once again, and I can see there is a break of structure right here because the last time price actually went up there, it actually created another higher high. So you can see this is the high right here, and this is the higher low, and then right now price created another high, and right now price is potentially pulling back after creating this higher high. So at this point of time, I'm marking up my break of structure. I'm also going to mark up where's my swing high and my swing low. So this is my swing high right here, and then there's a swing low right here, right? So there's a swing low right here because this is where price actually pulls up, retrace, and then go up even further. So there's a very strong, or rather not strong, but like rather a weak swing low right here. At this point of time, we are looking for our flip zones, right? In order for this to confirm to us that, price is going to go down right now because this supply zone is going to do its job, right? This higher time frame supply zone is going to do its job. Sellers are going to enter into the market. Here's what you need to see. You need to see price actually, react to this demand zone right here, and it fails, right? It has to create that failed reaction, and then after it created that failed reaction, it has to break structural, which is breaking below this low, creating your market shift. That confirm to us and tell us that price is going to reverse from an uptrend to a downtrend, and only then you can look to enter for a sell position. So in this case, what do we have right here? What we have right here was that there was a demand zone right here, right? Obviously, there's going to be a demand zone right there because this is your pivot zone where price actually, goes up, come down, pivot, and then goes up, right? This is where demand step into the market, and this candle actually initiate that demand. So this is your demand zone. And right now, price seems to be creating that failed reaction. So what happened right here is that price comes down into the demand zone and it reacted from the demand zone. Remember, the reaction is very important. You need to see that reaction because it confirmed to us that this demand zone is working. But whether it does its job, it's another question. And in this scenario right here, if this demand zone were to do its job, what price is going to do is that it's going to continue going up even higher, creating that higher high and higher low, and just continue going to the moon. But in this case, it did not have enough momentum to do that. It did not have enough fuel. So what happened is that after price actually reacted from the demand zone, sellers stepped back into the market and pushed the price down, creating your market shift. And it actually broke through the last low right here. When it does that, we have an officially a market shift right here, right? A shift of structure. And right now, this could be like the first sign that tells us that the order flow is about to shift from bullish to bearish. So this is where supply actually stepped into the market after it created a failed reaction from this demand zone. So this is your supply zone, right? And this is also known as your flip zone, right? Because once again, this is where demand has flipped to supply and it created that failed reaction, right? So ideally, I would mark up like the candle right before the supply step into the market like this. But what you can also do is to mark up like the entire range. This entire range also constitute as a flip zone, right? But for me, I like to refine it to like just this candle right here, right? But obviously, if you refine it to like this as well, it's also quite valid. So this entire area would be a flip zone. So in that case, I'm pretty much waiting for price to actually tap into that flip zone, and that is when I can potentially look for my entry somewhere within this flip zone. So let's just drag that out right there. And potentially, I could be placing like some sort of sell order at this flip zone. And now my stop loss will be above this flip zone, somewhere right around there. And then my take profit will potentially be where's the next demand zone, right? Where's the next swing low? And this could potentially be the next swing low right there. So this would be like a very easy trade setup right there. And you can see, let's just observe what price does, right? Because obviously, I feel like this stop loss is way too big, right? And if price actually goes up there, tap into the flip zone and just mitigate it, then obviously my stop loss wouldn't be so wide. It doesn't make sense for my stop loss to be that wide. In that case, my stop loss will probably be just right above this area right here, and my risk to reward ratio will be much more higher. So in this case, just observe what price does. Okay, you can see price taps into that flip zone. That's a good thing, guys. Price taps into the flip zone. And usually, sometimes, just for you to take note, price can either go into the 50%, which means like the halfway through inside this flip zone, and then go, or sometimes it can even touch the flip zone and just go. There's never like a rule that says that, okay, you should enter immediately after price tap into the flip zone or tap into the 50% of the flip zone. It's all depends on you, right? So test it out and see which one works for you, and then stick to using that one. So in this case, price has entered into like the 50% of the flip zone, and that is when I can potentially have entered for the trade setup manually. I always prefer to enter my trades manually after getting some sort of confirmation. So I enter like some sort, like 50% right here. You can see bearish liquidity started entering into the market. Supply have officially stepped into the market, and this flip zone is going to do its job, right? So somewhere right around here, this 50%, I've already entered into the trade. My stop loss will be probably just right above this flip zone, and this would potentially be a 1:3 risk to reward ratio. You can just observe what price does. Boom, smash your take profit. As simple as that. Got out of the trade. Happy days. Go and celebrate with champagne or something. Now, after we got out of this trade, observe what price is doing right now. Price has came back down here to this swing low, right? And this swing low is usually like a point for smart money to actually grab more liquidity to continue this down move. So most likely it's gonna like reverse at this area right here, creating that another lower high and then go down even further, right? It's literally that area for smart money to grab more liquidity. So at this area right here, that is also your demand zone right here. So once again, that is your demand zone right there. And in this area, we want to see whether price actually respect this demand zone or not. And in that case, I'm waiting to see whether there is a failed reaction right here, or price actually react to this demand zone and just continue going back up, right? So let's look at what price does, and you can see price comes down, boom, there you have it, your failed reaction. Once again, price actually reacted to the demand zone, right? A very valid reaction, but like I said, it was not enough to continue going up, right? It did not have enough momentum. It did not have enough buyers to continue pushing the price up. So over here, this is what I call the failed reaction, right? Failed reaction happened right here, so you can pretty much draw your flip zone within this range right here. So this entire range would be your flip zone, right? Flip zone right there, and then price also created the market shift right here already, where price actually pierced past the last low. You can see price is going to go down, and right now we could potentially look to enter for a sell position once again when price actually, enter back into the flip zone. You can see price step into the flip zone right there. Price step into the 50% of the flip zone once again. Pretty much like quite similar to this. We are inside the trade and price just collapse, right? Price just collapse and go down. And yeah, happy days. This is essentially how you trade the flip zones in a bearish downtrend. So this is a pretty good example of demand to supply flip zone, where supply has pretty much overpowered demand and causing the entire order flow to shift from bearish to bullish. Now, what does it look like in an uptrend? What does a supply to demand flip zone actually looks like? And that is what we're going to explore right now. So over here, once again, price is coming down here, crashing down, and I can see price is approaching this demand zone that we have earlier. The reason why I draw this demand zone is because this is actually your drop, base, rally, right? So this consolidation right here is happened right before the demand step into the market and push the price up. Right, so this is pretty much a valid demand zone. So at this point of time, price is approaching this demand zone and we don't really want to do anything, right? It's too late for you to enter for a sell already, even though price in a downtrend, because price is approaching a demand zone where smart money is potentially going to enter buy orders in bulk and potentially push the price up. And look at what price does. Price steps into the demand zone and boom, you can see smart money enter into the market and create a V-shaped reaction, right? Where price created this V-shaped reaction, this is most likely involvement of the big financial institutions, right? And usually happen after a liquidity sweep. So there was available liquidity below these lows right here. So there was a liquidity sweep right there, right? Sweep the liquidity right there. And at this point of time, like I said, I want to mark up my market structure, my swing lows and my swing highs. So this is the last swing high right here, or this is the last lower high. So at this point of time, there is also a supply zone right here, right? There's a supply zone right here that actually resulted, or rather caused price to move down to this demand zone. So at this point of time, we want to see whether this supply zone does its job or not, right? So you tap into that supply zone, and like I said, if this supply zone were to do its job, it's going to continue creating that lower high and lower low and lower high and lower low. Then at that point of time, there's no point of us thinking that price is going to reverse, right? So we'll see. You can see price is mitigating this supply zone, starting to head back down. But look at what happened, right? Instead of creating that lower low, what price actually did is that it created that higher low. And you can see this low right here is higher than this low. So this pretty much confirmed to us that this is your flip zone, right? This is where supply has officially flipped to your demand, right? So this is your supply to demand flip zone. And for this to be a valid flip zone, like I said, we want to see that market shift. We want to see price actually pierce past this last lower high, confirming to us that there is a shift of structure, confirming to us that this bearish order flow is about to end, and right now price is going to go to the moon, and that is what we want to see. You can see, okay, market shift happened right here, and right now I could potentially enter for my buy position, and price actually taps into the demand zone, and could potentially, have my take profit somewhere right up here at this supply zone, right, at this next supply zone right here. Right, a very quick scalp or whatsoever. Not really quick actually, but you can see price tap into that flip zone right here. Once again, boom, tap into it. Actually, you already tap into it right here, right? You already tap into the flip zone right here. It taps into it. You can see when it taps into that flip zone, a lot of liquidity actually enter into the market, which can be seen by these huge imbalances. You can see small money enter into the market, boom, this is where the demand has overpowered the supply, and right now we are just about to go to the moon. And you can see price just about to, just about to do its thing and just go up there, right? And yeah, potentially go up to this supply zone that we have right here, and just steps into it, and boom, we get our take profit hit, and life goes on, right? Very, very simple. And the thing about this strategy is that it seems quite simple, but the hard part is waiting for that high probability trade setup, waiting for that market shift to occur, waiting for price to get back to the flip zone after the market shift occur. That is the difficult part. It's all about patience. Patience is the name of the game. Now, I'll be very honest with you. Even though this is a high win rate trading strategy, the truth is no strategy works 100% of the time, right? This strategy will not work all the time. Sometimes price will just not respect the flip zone. It will not respect to the flip zone. It will go to the extreme zone and then go. Or it might not even touch the flip zone and then go, right? So it really comes down to you asking yourself this question here. When in doubt, just ask yourself, has the flip zone swept liquidity? Right? Because the market moves based on liquidity. If smart money want to enter for a buy position, they need a large amount of sell orders. And they can only get that from you guys, from your stop loss, from the liquidity inside the market. So ask yourself this question, has the flip zone swept liquidity? If yes, enter on the flip zone. If no, wait for a liquidity sweep to happen first and enter on either the extreme supply and demand zone or the next supply and demand zone after getting extra confirmation. This is what I mean. So over here, this is a pretty similar example, so I'm not going to go through the entire thing again. But what happened right here is that price was in a bearish downtrend, bearish order flow, and price has just came back down to this strong demand zone that we have right here. So we have our supply zone right here, and you can see price created that flip zone after price reacted at this demand zone, right? It just reacted at this demand zone, come up to this supply zone, and then instead of continue going down, it actually created that higher low, right? So this low higher than this low right here, and this is your flip zone. So at this point of time, I can just mark up my flip zone right here. Right, this entire thing is a flip zone. So look at what price does. Price goes up, price comes into the flip zone. Potentially you enter for a buy here immediately after price come into the flip zone, and you place your stop loss below this flip zone, and bam, you just lost your trade. You just lost your trade because you don't really know what you are doing. Like, you're just thinking of trading in terms of like a very surface level knowledge. You don't really have a deep understanding of liquidity and the market in general. So what happened right here is that what you did wrong was that you did not wait for liquidity. Like I said just now, this flip zone strategy is not going to work all the time. You're not going to get that perfect flip zone reaction every single time. The market is random, these patterns are random, so what you can potentially do is to react to what the market is doing. So in this example right here, like I said, you are asking yourself, as price enters into the flip zone, whether price has already swept liquidity, whether this flip zone has already swept any sort of liquidity. And if you look towards the left, where is all the liquidity points? It's right here, right? You can see as price pivot right here, there's going to be available liquidity below these lows right here, because maybe buyers are entering right here, they're going to be placing their stop loss below these lows right here, below this higher low. So there's going to be a ton of liquidity being built up below these lows right here. And in addition to that, where else is the liquidity? There's a trend line right here, right? Retail traders, they'll to place their trend line. When they place that trend line right there, guess what? They're going to be placing their stop losses below this trend line right here when they enter for a buy after price bounce off the trend line, after price bounce off the trend line. And in that case, all the stop loss below this trend line right here, all of these are available liquidity. So there's liquidity below all this trend line right here, lots of liquidity. There's also liquidity below this low right here. So in this example right here, price has not swept the liquidity whatsoever. So what we could potentially do is to wait for the liquidity sweep to happen. Wait for price to sweep all this available liquidity, and then we enter for the trade. So once again, if you look at the guide that I have right here, so if it has not swept liquidity, right, you want to enter either on the extreme supply or demand zone or the next supply or demand zone. So in this scenario right here, this will be the extreme zone, right? This will be like the most extreme demand zone that we have right here, right? And right now, we could potentially expect price to sweep the liquidity first below all these lows right there. And when it does that, it's going to tap into the demand zone, right? This extreme demand zone. And only then, that is when you can potentially look for your buy setup somewhere right within this demand zone, right? And if you look for that, you can see price just skyrocket, right? Huge amount of money just enter into the market. Huge demand have just officially stepped into the market after price has swept all the available liquidity right here, or rather after the smart money have swept all the liquidity. And what happened if you failed to enter at this demand zone right here? Then there is the next supply and demand zone that you can actually look to enter for, right? You can see as price actually started retracing right here, right? And you can actually draw another demand zone right here. And next time price actually tap into the demand zone, you can easily enter for another buy position and just continue this, so on and so forth, right? So that is what I mean when I say that if the flip zone has not swept liquidity whatsoever, then you want to enter on the extreme supply or demand zone or the next supply and demand zone after getting the extra confirmation, which only comes in a form of, signs that tell you that smart money have entered into the market. Once again, another example right here. So right now, price has came back down to this swing low that we have right here. And right now, once again, this is your demand zone, right? This entire thing is your demand zone. And you can see price has actually reacted to the demand zone and created that failed reaction right here, where price actually goes up, create that lower high, and just goes down, right? So this could potentially be your flip zone, right? And like I said, you want to ask yourself, has the flip zone swept liquidity? If yes, then potentially you could enter where price step into the flip zone. But in this case, there was no liquidity being swept whatsoever, right? So we could potentially expect price to completely disregard this flip zone, come into like this extreme supply zone right here, and that is when you can potentially look for your trade setup, right? But once again, always wait and react to what the market is doing, and you can see price just goes down and boom, completely disregarded in this flip zone. And where is it going to go next? This entire supply zone that we have right here, right? This entire supply zone that we have, this range right here. Boom, that is when you can potentially look for your entry. So let's say you actually wanted to enter for a sell position at this flip zone, right? And you did not get the entry because price just completely mitigated it. Or you actually enter into the trade, but you place your stop loss above this flip zone and now you got stopped out. In that case, suck it up. Move on to the next trade. Right, just get rid of this and look for your next opportunity. Your next opportunity window will be at the extreme supply or demand zone. So this is the extreme supply zone. So we are going to see whether price respects this supply zone. And if it does, I want to get involved for a sell position and place my stop loss above the supply and potentially take it at the next take profit, next demand zone that we have right here or whatsoever. And you can see right here, tap into the supply zone, boom, comes down to this demand zone right here before actually heading up and boom, smashing our take profit. So this is exactly what I mean when I say that you need to be very reactive. You need to be very flexible and adapt to what the market is doing. And always make sure that you are being very careful. So go out there, play with this trading strategy, practice, backtest, and see whether it works or not before you try it out on your live account. And if you can combine this flip zone strategy with market structure, trust me, it's going to be insane, right? Let's just say it's going to be crazy. If you think that you have learned a lot in this lesson, trust me when I say that this is just the tip of the iceberg of whatever we teach inside the 1% Club. This is just one of the 100 lessons that we have inside the 1% Club. So if you want more lessons just like this, more in-depth trading guides, go check out the 1% Club. And anyways, as always, remember you're just one trade away.